the Fed's recent statements dampened the market outlook, causing declines in Bitcoin, stocks, and gold. These numbers are crucial because they reflect the economic health of two of Europe's largest economies and can impact the euro. That is giving us an entry to make a sell, to make a short movement. Welcome to today's market update, where we'll be covering movements in Forex, Bitcoin, and gold. This week, the US dollar remains firm following Fed Chair Jerome Powell moderately hawkish remarks, as inflation data suggests that a rate cut might be off the table. Meanwhile, gold is trading near resistance levels with potential upside, as it's increasingly seen as a hedge amid economic uncertainties. Bitcoin, on the other hand, is facing volatility but has shown resilience at recent support levels, with investors' interest remains strong despite market fluctuations. We'll break down what these trends mean and highlight opportunities for trading each asset. Let's begin. We will start with the economic calendar, and don't forget that the time we are seeing right now is based on GMT -5. So on Tuesday, November 19th at 8:30 a.m. we have Canada inflation report, including monthly and yearly CPI, along with the trimmed CPI. These reports show how the prices of goods and services are changing in Canada. High inflation often leads to interest rate hikes by the central bank, which can strengthen the currency. On Wednesday, November 20 at 2 a.m., the UK will release its annual CPI, which measures inflation over the past year. Higher than expected inflation may increase expectations for tighter monetary policy, strengthening the British pound. On Thursday, November 21 at 8:30 a.m. in the US, we have the unemployment claims report. This data gives insight into the health of the US job market. An increase in claims can be a sign of economic trouble and may impact the dollar's value. On Friday, November 22nd at 2 a.m., the UK releases its monthly retail sales data. This report shows how much consumers are spending and is a good indicator of overall economic strength. Lower than expected sales could signal a weak economy and hurt the pound. At 3:15 a.m. and 3:30 a.m. on Friday, we get the French and German flash PMIs for manufacturing and services. PMIs measure activity in the manufacturing and services sector. A PMI below 50 means contraction, while above 50 means expansion. These numbers are crucial because they reflect the economic health of two of Europe's largest economies and can impact the euro. Then, at 4:30 a.m., we have the UK's manufacturing and services PMIs. These are similar to the French and German PMIs, and they give insight of how the British economy is doing, which impacts the pound. At 8:30 a.m., Canada releases its retail sales and core retail sales data. These reports show consumer spending, with core retail sales excluding some volatile items. Higher sales are usually positive for the economy and can strengthen the Canadian dollar. Finally, at 9:45 a.m., we have the US flash PMIs for manufacturing and services. Just like the other PMIs, these indicate the health of the manufacturing and service sectors and can give clues about US economic growth. And now let's continue with the most important news of the week. And I'll remind you that the Fed's recent statements dampened the market outlook, causing declines in Bitcoin, stocks, and gold. Concerns about inflation resurfaced due to an unexpectedly high producer price index, making investors cautious as the path for interest rate cuts became less clear. Fed Chair Jerome Powell emphasized that there is no rush to cut rates further, which contributed to the stock market decline, with the SP, Dow, and Nasdaq all closing lower. Gold saw a dip amid reduced risk appetite, but Bitcoin's movements were more volatile. After an early decline, Bitcoin attempted a brief rally before stabilizing lower as peers eyed the $87,000 support level. On the positive side, Bitcoin exchange traded funds, the ETFs, are seeing significant inflows, helping absorb sell-offs from long-term holders. The spot market is driving this rally, which analysts view as a bullish sign. Looking ahead, Bitcoin's post-halving cycle is expected to drive prices much higher, with predictions of a peak around $180,000 the next year. Matthew Seigel of Bannock anticipates that institutional demand, supported by recent spot BTC ETF launches, will continue to drive growth. Unlike previous cycles, retail interest hasn't yet peaked, suggesting that there's still substantial room for gains as more retail investors get involved. TradingView analyzed also forecasts potential for even higher targets, expecting BTC to reach new highs by the second quarter of 2025. They see a bullish setup with BTC positioned for further growth within a long-term upward channel, though caution that RSI nearing overbought levels could signal some volatility along the way. Altcoins experiencing mixed performance, with some like Mantra and Ponke seeing strong gains, while others like Nero and Kronos posted losses. The overall crypto market now stands at 2.93 trillion, with Bitcoin holding a dominance rate of 59.3%. Although the dollar remains at risk for positioning-led corrections, US economic data and Fed communication have not provided a clear catalyst for those moves. Fed Chair Jerome Powell emphasized economic strength and cautioned against expecting future rate cuts too soon, which supported the dollar. Inflation data, the CPI and PPI, remained elevated, limiting the likelihood of a December rate cut. Regarding the euro, the ECB minutes showed a shift from concerns about inflation to concerns about growth, potentially leading to a 50 basis point cut in December, which could weigh on the euro. Turning to GBP, UK GDP data for the third quarter was disappointing, suggesting an economic slowdown, although the Bank of England may pause in December. The outlook for euro GBP remains weak due to the rate differential between the Eurozone and the UK. Central and Eastern European currencies have recently stabilized, although short positions in these currencies following the US election have impacted the market. The recent pause in the dollar rally allowed for some recovery in currencies like the PLN and HUF, though the overall outlook remains bearish for the CEE region due to lower growth rates compared to the Eurozone. And now, before finishing, we need to look to the graphic, and we will start as always with the US dollar index. As you can see in the 4 hours chart, we continue to see an uptrend, and that means that the price is only moving to an upside way. So it's highly possible for this week that we can see maybe a correction, maybe to one of the liquidity points that I will show to you right now. One of them is located here at 105.718. The other one is at 105.488. And if the price continues to do a bearish movement, we can also establish here a target for the 105.205. These other targets could be really far from the things that we are going to see this week, because it is highly possible for the US dollar index to maintain the upward trend. So if we are expecting for an upward movement, it is highly possible for the price to continue growing. So one of the targets that I would like to see is located at 107.358, and the next one is 108.005. If you see that the US dollar index is doing this kind of movement and reaches the first target, don't forget that there can be a manipulation of this price, a manipulation of this level. So you can see something like this. After there is the manipulation, we can start maybe seeing our strategy that is giving us an entry to make a sell, to make a short movement. If this target is broken and the price continues with its upward movement, we could see that the price could reach 108.005, and then we can also be waiting for a manipulation to also expect this kind of movement. So you should focus on these reactions from the price. Let's continue with the SP 500. The last week we have talked about this next target that was located at $6,000. The price touched this target, and after this the price only was rejected, and that's also because of the fundamentals we have seen this week. So we saw this pullback, then the price tried to make a new upward movement, then the price failed to do a new high, and after that we are seeing a lower low. So for this week maybe we can see a recovery from the price with an upward movement, and then we can expect to continue seeing more downward movements for this week. I will maintain my bearish targets. The first one was reached this week also, which was located here at $5,946, but the next ones at $5,890, and the next $5,824 will be maintained, at least for me, to take into account that this could be targets for the price to manipulate or to gather some liquidity before doing a new upward movement. Don't forget all the fundamentals that we have talked in this video, because most of the fundamentals were directed to have these kind of movements, at least from the indices. Let's see the next one here, the euro dollar. If you remember the last weekly analysis, I told you that we are going to see downward movements with these assets. So that's what happened with the euro dollar, and we reach a new lower low. So now it's time to see if we have a new opportunity to make a new downward movement. Maybe the price can return to this point of 1.06018 or maybe 1.06498 or also 1.06026. These points can be necessary for the price to manipulate them and then continue with the downward movement, with the downward trend that we are seeing, a clear downward trend on the 4 hours interval. So, in other words, I will be expecting downward movements for the euro dollar at least for the next week. Let's finish with BTC. It's easy to understand that we are seeing the rally with Bitcoin, but you need to stay focused because FOMO is increasing in every person that is trading Bitcoin right now. So yes, it's highly possible that we will continue to see new upward movements. If you remember, I told you that there are several bullish targets that could be located even at $180,000. So it won't be difficult to at least reach the $100,000 for this rally. The objectives that I will keep for the next week would be $93,495. I will also like to put this psychological target $95,000, and for this week could be also one nice objective for the price to reach the $100,000 for Bitcoin. And that's for our analysis today. In summary, the dollar remains strong, gold shows promise as a hedge, and Bitcoin holds steady even having volatility. Staying on top of these movements can help you make smarter trades. So if you found this video helpful, please give it a like, subscribe to the channel, and hit the notification bell for more updates. Also, if you are ready to trade these assets, be sure to register with Chief through the link in the description. Thanks for watching and see you in the next video.